What's up, traders? What's up, tycoons? Super excited for today's video. What the hell just happened to natural gas? Oh my gosh, it just completely tanked today. If you guys weren't prepared for this, make sure to subscribe to the channel and, smash that like button, share the video with your friends. I gave a big warning yesterday, all right, going over some of the key areas that oil could come down to, that UNG and other things like that could come down to. We're going to recap that in today's video and kind of just let you know what happened today, was foreseeable, right? And you could have, prepared yourself for some of this. So we're going to highlight all of that in today's video. We're going to break down a lot. We're going to go over the futures, the spot price. We're going to take a look at oil, UNG, and cold. Let's go ahead and get right into it. So we're here taking a look at oil, and there's something that I want to bring to your attention right away, right? And it's this gap down that we filled today. Now, look at exactly where the price came down to, okay? We literally filled this gap, filled this box down, all right? There's simply a gap between this candlestick, the high of this candlestick, and the low of this candlestick. That's what's known as a gap on the daily time frame. And you can see that we simply came down and filled this gap. Now, gaps tend to fill about 90% of the time historically. The big question is when are they going to fill, not so much if they're going to fill. Right, you can see we had this gap over here, and it took a while for this one to fill. Right, this happened in June 12th, and then in July 17th, we came down and filled that gap. Right, over here, we had a gap May 15th, and we ended up filling that gap over here in June 22nd. So, it just goes to show that these gaps, they really do tend to fill a large majority of the time. And I put this out in my video yesterday that, hey, Boyle had two gaps down to fill. Okay, we already filled the first one down here today. All right, we filled this one today with a massive red day, all right, down 9%. And a lot of people weren't ready for this, weren't prepared for this. We still need to be cautious, okay? There's another gap down here just below $61. So it's very possible, all right, if we keep up this bearish momentum and we break down, we could break down, retest this area and look to come down and fill this gap yet again. So you do want to be mindful of this stuff, right? Especially when you see these massive rallies and Boyle goes from, $55 all the way up here to basically $80 in a very, very short period of time. You want to be mindful of these things, right? And you want to have some type of a hedge, some type of protection. We did break a very nice trend line here, right, that we were looking for, and we got the breakout we were looking for. But if we take out some more of these drawings, if we just go right here and we were to take a look at this, there's something that I mentioned a lot of times, which is known as a look above and fail. So take a look how, we broke out here essentially. All right. And, in a textbook scenario, you're going to look for a breakout, a retest, and then a push higher, right? That's very textbook. And that's what you would be looking for. Because in fact, this moment right here on the breakout, this right here is the time and the opportunity for bulls to show that they're in control of the price action and really push things up higher to our price target here of 89.15 that we were targeting. Rather than doing that, we can see that what we really did was we looked above and we failed and we came back down into this range. Now, that's normally a bearish signal whenever you get a look above and fail. And the reason being is, because, bulls had the opportunity, right? We had all of the opportunity here to really push price higher and show that they're in control. We looked above, we failed. It was a false breakout. So, the next support target that we have here is going to be right around $65, which is 64.73. You can see that, the daily candle opened up here previously, consolidated around this area previously in the past many times. So it's a very valid level. All right, now that's not to say that we can't push up higher, right? We definitely can, but a lot of this pump in natural gas lately has been news driven and catalyst driven, and we're going to see, if that momentum is over and this was really a true false breakout, then if that's the case, most likely we're going to come down and fill this gap, so that's one of the main things that I wanted to highlight. And we took a look at cold as well, and cold had gaps, but they had gaps to the upside, right? And we take a look today at what cold did, and cold essentially came up and filled its gap up that it had to fill. Right now it fell just short, but you can see here that we had yet again another gap. Right, if we're a little bit more precise here, you can see that cold went ahead, and what did it do? It had the huge gap down and it started filling the gap up. So on cold, remember, this is going to be the inverse of something like Boyle. what do we see? Yet again, we have another gap up to fill. Okay. So cold is very much possible that, cold could come back up here close to the 60s. Now, ultimately, we're bearish on cold, meaning we're bullish on natural gas if we can still remain below this $60.36 price level. All right. We talked about how our essentially our bear flag could have played out right here that we were tracking. We were looking for an ABC move down to the low 40s, but we actually came here to about 45. And in yesterday's video, I mentioned these gaps up and I said, hey, this could be the extension right here of that ABC. If the bear flag really wants to play out in a textbook scenario, what you're actually going to see is you're going to see another push up retest of the trend line here, and then you get the rest of the move down to the low 40s on cold. All right. So that's definitely something that we'll pay attention to. But there was a lot of warning signs, to pay attention to, right? When you look at cold right here, extremely, basically oversold here, right? Just above oversold conditions on the daily time frame. When you take a look at Boyle, the exact opposite, right? It was basically just at overbought, right? Like 1 or 2 points away from being overbought on the daily RSI. Now, let's go ahead and take a look at the natural gas spot price real quick, and show you guys what it is that I'm looking at there, okay? Because that's where you can get a true sense of the development. And ultimately, it had a nice breakout, okay? 279 is that resistance level that we're paying attention to right now, and it's been bull flagging, okay? So, we're going to see once the spot price of the Henry Hub natural gas spot price updates, again, was this going to be a false breakout here where we looked above and we're going to fail and come back down to this range and spot price is most likely going to target 243? Or are we going to see a little bit of absorption here, all right, and try to come back up and break out above this 279 level when it comes to the spot price? Let's go ahead and take a look at the futures real quick, and we'll take a look at natural gas futures, and then we'll dive into UNG. But when we take a look at the futures here, this is not a great looking candle right here, okay? We have essentially an engulfing candlestick right here, but we did close exactly at this 228.1 level, right? That's right where we came down to, and then we got a slight bounce. The reason that's so important is because we've been looking at this on the 4-hour time frame. And you can see exactly how many times we've really tested this level, right? Initially, we were cautious right here and we were wondering, were we potentially going to see a massive breakdown in the price of natural gas with this rising reg? And rather than getting that, what we did was we actually got something very healthy, right? We actually did some controlled selling here and established a little bit of a selling channel. So, you have the big push up and then you get this controlled selling here. This is bullish, right? This is not capitulation where we're seeing the massive move to the downside to retest the previous lows from over here. I mentioned we were getting this controlled sellout. We were waiting patiently for the breakout. And we mentioned this 228 level right here. We tested it so many times, guys. We tested it about 17 times on the 4-hour chart, right? 1, 2, 3, 4, 5, 6, 7. Then you see 8, 9, 10, 11, 12. 13, 14, 15, 16, 17 times before we ultimately finally just got the breakout. And I mentioned in that video that we were getting overextended, right? When we look at our RSI right here on the 4-hour chart, we were at these overbought conditions, and I mentioned that it is very possible that we could see a pullback. And if we get a pullback, you take a look over here, you can see the last time when we had something very similar, okay, where we came up to these overbought conditions, right? So we had this huge rally, essentially right here. And you can see we're at these very overbought conditions. And I mentioned that we could see something very similar where we pull back down to the 50 line on the RSI. Okay, and we had a huge engulfing candlestick right here. And then what do we see? Buyers stepped in and pushed price right back up higher. So that's what we're going to be looking for, right? If we can hold this 228 level here, right, then that's when we could see a rally here in Boyle, UNG, and cold in the very short term, right? If we lose 228.1, then again, this is going to be a look above and fail, all right, a false breakout at this point, and we'd look for a downside continuation in the short term. But when you take a look at the pattern in the history, as we just did over here and over here on the RSI, it's very possible that we're repeating those conditions where we come to these overbought levels on our 4-hour chart, and then we come here and we would look for a little bit of a zigzag back upwards towards these overbought conditions, at which point we would be forming a bearish divergence and we would be looking for yet again another pullback, right? And that's what this would look like here. It would look something like this, which is exactly what we got over here as well when we got the bearish divergence, right? You can see We're making these lower lows or lower highs on the RSI, right? After making, very, very simple to see, right? You have a high here, you have a higher high here, right? Price action is trending upwards. We're making higher highs. We're making lower highs on the RSI. All right. And then we see we get that pullback. And rather than getting a capitulation, as we mentioned, to the downside, we got that very controlled selling. So if that was a little too sloppy for you, let me try to redo this real quick and make it very simple for you. So we have a high here. We have a higher high here. Price action is going higher. And we have a high at these super overbought conditions. We pull back down, we come back, retest those overbought conditions, and now we're making a high and a lower high on the RSI, forming bearish divergence while price action is going higher. This indicates we could see some type of pullback. We pull back rather than getting capitulation from the rising wedge with bearish divergence. We get very controlled selling in a very constructive manner here. We get a strong breakout. And now we're repeating back to those overbought conditions, again, pulling back to the 50 line on the RSI. And we're going to look to see if this can zigzag higher. And at which point, if we make another higher high, right? And so, essentially we have a high here. If we come over, make another higher high. But if we can make a high here, and then we come over and make a lower high here, this is where we would expect another pullback yet again, right? If we zigzag up something like this, price action rebounds, rallies up to this area, that would put us also very close to the top of our supply zone here. And that's going to be a lot of, resistance, a lot of selling pressure up there. That's when we would potentially look for another pullback, and we would look to establish, controlled selling again, where we have a controlled sell-off versus, a capitulation where we come up to these levels and then we see something like this and really capitulate. You want to see that controlled selling that we had over here and then look for the next breakout and next entry point. Okay. Let's go ahead and take a look at UNG. We'll break down UNG real fast for you guys. And we'll switch back to our daily time frame just so you can see things on a daily basis, right? We talked about gap filling about 90% of the time. You can see we had this gap up here from March 16th of 2023. And here recently on August 9th, we actually came up and filled that gap. Look at exactly where we topped out on that daily candlestick. We topped out, the top wick is at the very top of that gap. We mentioned the two gaps down on Boyle. We mentioned the two gaps up on Cold. And we also mentioned the two gaps down on UNG. So UNG, if it continues this downside direction, we're going to be looking for a retest of 715. If we break that 715 level, then most likely we're getting the rest of the gap filled down here at $7. But if the futures, because remember, UNG and Boyle, they trade based off of the futures. If the futures can hold that 228 level right there, then we would look for upside continuation on UNG, and we'd actually be targeting around $8.21 a share. So let me know your thoughts on natural gas down below in the comment section. I just started a brand new free newsletter. If you guys are interested in getting some free finance education, as well as some free trade ideas and setups every single week, I'll be setting around 3 to 5 emails a week on the newsletter. Feel free to, use the link in the description or the comments down below, and you can sign up for that newsletter. It's a really good way to help support the channel. And if you enjoyed today's video, all right, you can also email me as well anytime, ZachlyTrades@gmail.com, and we can work on setting up a coaching session. I do these coaching sessions every single week, and I do them in either half-hour or full-hour intervals, and we can work on getting a time scheduled together that fits both of our schedules. So thanks once again for watching. Smash the like button, subscribe for more.